organizers or panelists on the line. When you are
I
ready
wanted to do our
begin the
market
presentation,
assessment
press
looking
the Start
at next
Broadcast
week.
button on the
This week
GoToWebinar
I
control
have
panel
pulled
to allow
a
all
combination
attendees to
of
hear you.
puts and
This
calls.
system will notify
Both
you
of
once
them
you
have
begin
done
your
very,
broadcast.
very nicely. The market has tried some relief rallies intraday that just wasn't able to sustain very much, but I want to show you something. Let's look at this a little closer. When we're trying to get a full visual of what's going on with the market, then you guys have seen me go back and pull the weekly, and I want to pull the weekly. Now I've done the 2-year. You could do a 1-year, but I just popped the 2-year on here. We always pull up our 200 moving day average. We do pull that up. We like to look at it because we know that the masses tend to look at this with the regular technical analysis. So as I look at this complete picture, let me see if I can go ahead and click on this so I can draw on it. There's a couple things to note because we study candles. And with the weekly, I have a tendency to use this pattern a little bit more than I use it on the daily, because normally I like 3 candles to give me an idea of anticipated move. But with a weekly, I'll do 2 candles. And with this pattern, you guys should know exactly what this is. You guys see this? Yeah? You've got the bearish candle, which encompasses or engulfs the bullish candle before it. So it does look like we've got a little bit more downside. I'm looking at the SPY. We're going to pull up a few others in just a few minutes and just kind of take a look at it. You know, when I start looking at some of these things, I don't know if I can get this to work. I probably can't. I'm going to take a peek at this, and I actually wanted to pull this a different direction, but I'll live with it this way. If you look right here, you can see that we've got a fib number very, very close by with this. I don't think I can get it back up there. Yeah, I can. Move it over just a little bit. I like to pull this another direction, but I'm going to pull it here for you. So we're at a critical level here. We're also coming up against the 200 moving day average. But the one thing I want you to look at that's really important, this doesn't let me pull the fibs the way I want to pull it. Once you have this pattern, we see this pattern show up and it's pretty consistent. So, you know, this is the weekly, so this encompasses 5 days. So if you look at this pattern here, you see the next week was a down week. We had the exact same candle pattern. Can you see it? We had the inverse here. We had the bullish engulfing the bearish, and you can see that it confirmed. So while we need confirmation, I don't want you to be scared. I just want you to remain aware. Remain aware, because some people are trying their best to learn this, and you feel like the clock's ticking because you're in a annual course. This is why you're trading with me for a year, to understand cycles. And this is why people stay with me for years, because not that you have to, but this is how we all trade, I think, with safety of numbers. So let's go ahead and pull up the Dow, which is a tighter range. You can see that we still have pretty much the same pattern. Let's pull up the diamonds, which you guys know I trade a lot, which is the ETF, and you see this exact same pattern unfolding right here. The exact same pattern. You see it here, and it confirmed 2 weeks later. We had the same thing. So let's make sure. There's probably others I could go through and pick out here. Let's look at the Russell, which is a little wider scope. And we still have the same thing. The fact that it has breached the 200 moving day average is still quite bearish in its own right. So while I have my bear suit on, you know, you have to remain aware that we have some of those intraday rallies. I'm going to pull it to probably right here. Some of these we've already broken down below this. So this is definitely where we need to make sure that we don't sit there too close with something. Now moving into next week, I have a few contracts that are calls. So I'm going to put my stops back in place on Monday. Stops in place for any calls positions, because I can always re-enter, but I won't let these go down to nothing next week. I won't. I just won't do it, okay? So I've got something I want to show you on another video that I've been working with Scott. And I think it will help you guys preserve your capital when you get in, because everybody's trying to still trade like nothing's happening, and you can't do that. People say, well, you're trading like nothing's happening. Yeah, but I've been doing this a while, okay? So I'm trying to be a little bit more cautious in my movements, knowing that I have people watching, because I don't want you to get out there and jump in the water too deep, okay? But we've talked about this as we go in and start looking at our bias. I look for 3 arrows up or 3 arrows down, and primarily I'm seeing arrows down. I added another indicator to help you this week. I did a fib measurement. So while I have a neutral, bearish, neutral, I pulled up the fibs measurement to show you that the fib measurement, this is short term, is actually bullish. So I may be able to pull a bounce rally intraday play out of that unless the market's up one day, okay? So I'm not here to say that it's 100% sure that the market will be down this week. We just want to be on the right side of the trade. I just need you on the right side of the trade. If you'll put your stops in, this won't be an issue. You'll notice Friday I stopped out with a 10-cent loss on Amazon, and normally I'd let Amazon breathe more than that, but I was leaving, and I had tight stops in given the day, because I didn't want to come back from lunch and that thing be worth a nickel, because it happens when the market's like this. So I put a tight stop in. I was willing to risk, 10 cents on this trade. If it's 2 contracts, I'll risk $20. If I like how the trade's working, then I would add to it. I could get it on up to a 10, 20, or 30 lot. But this is what you do, guys. This is what you do. So I want to ask you to look at making sure you understand how to put your stops in. Look at the market as a full picture. Don't just take one stock and look at it. When I look at this bias all the way through, I'm seeing negatives. Now, the only thing I see a positive on is silver. And we're trading gold and silver. I don't usually short gold and silver, but at some point I believe gold will retrace back. But if you look at this entire chart, except for GG and SLW, again, you would expect those to be bullish because those move along with the indices that we watch, which are, or the ETFs that we're watching, which is the gold and the silver, okay? But as I look at this, I see hardly any bullish indicators that would make me want to put my bull suit on this week. And even if I do see a couple of days like that, I'm going to be pretty solid. So, it may be that you'll see me do a couple of puts and as an overnight hold, or I may hold it 1 to 2 nights knowing that this week could play out. Because the way I look at this, when I go back and look at my week, Monday, I said if Apple breaks under 376.39, I would trade the puts. I could have held that all week, even though I may have had a day that it went up, where the market rallied, maybe a day during the week. Overall, you can see that it closed at 356, so I almost to the penny. So I could have captured a $20 move downward on my Apple. If I just captured 10 cents of that move, which I should have captured more, but just say I captured 10 cents of a $20 move, that's a $2 aggregate. So if I put one contract on, then I would have made $200 on that contract just to let it sit there. Same thing with the others. Use your contingencies, because these really are, as a rule, 100%. They're 99%, and this is why I trade them. You could trade it during the week as well. You can trade it. You can write that down and say, okay, if it's under 376.39, and then I'll short it during the week. And you could do it this way. You could do it at 11 o'clock, 11:30. Kind of look at it. We know it can kind of drift back at lunch. So just please use your contingencies. You guys know how to do this. Look here, under 201.93 we go short with puts. It closed 178, a huge move there. Under 149.53, it closed at 126.98. Same thing here. Under 243, it closed at 205. If you go back and look at where we were with Thursday evening, I even said Thursday evening when I went back and did my trades for Friday, if it was under 365.73, I'd short it, and it closed at 356. We should have been able to capture a $7, $8, $9 move off of that. Same thing with under 181.93, closed at 178. Under 128.39. So yeah, you're giving up some of this profit by revalidating it each evening, but these things really do work. They really, really do work. Okay, especially if you put the right times in. So pretty bearish moving into next week. I don't see this changing. We've looked at our major support levels. We've talked about the major support levels. Let's do the SPY. Again, we've got our pattern. Actually, I want to look at the SPX. Sometimes I've been trading stocks outside of the S&P and outside of the Dow for a reason, because they all seem to move the same direction. So I've been trying to pick up a few things outside of these just for safety measures, because some things are moving up. Friday we tried to trade ANN based off of the earnings, and I just completely missed the trade because I didn't stay with it to get in it, or I would have gotten in it. The LDK short worked. I'm trying to find some of these that cost 50 cents or less, and we can still make our 15 to 20 cents. If we could do that, you put $400 on a trade, and I can help you make $100, $150, $200 on $400. That's much better than us trading an Apple, where we put $1,200 on the trade at $1.20 to make $150 to $200. So I'm trying to stay with these less expensive options right now while the market's so crazy, so that it's just preserving capital. I'm just trading. I want the same trade. I want the same return, but I'm just making sure that I have less money in the market. So instead of putting $2,000 in the market on Monday, I may put $700 and maybe trade stocks that are the options are a lot less. So same thing with the SPX. I mean, if you did LDK, which some of you did, I sent those triggers out. I'm trying to give you triggers in the morning so you can trade it. I need to go back to the daily, because I mentioned, let me go back. I mentioned that you could trade that one. LDK on earnings. And you can see it closed at 506, and our break was 4 whatever. Get in the trade. I was trying to get Scott in at 15 cents. I should have had him loaded at 20 because it went to 40. And so that's 100% on your money. Well, if he'd gone in with 5 lot, $100, he would have made $100. $200, he would have made $200. So I'm trying to find these that can give us those pops. Sam calls these the catch of the day, and that's what I call it. I'm trying to find us some catch of the day trades. So stay tight, stay with me, keep those stops in place, put your bear suits on. Even if I see this thing rally up for a few days, I'm still in my bear suit. And I learned how to trade in a bear market. You can do this. You can make money in a bear market. Just don't be afraid to try puts.